there, hope you're well. We're finding more and more people are interested in ethical investing. So today we're going to chat about what it is and some of the pros and cons. Ethical investing, also known as socially responsible investing or sustainable investing, is a financial strategy that seeks to align the investment decisions with ethical, social and environmental values. The approach has gained significant popularity in recent years as investors increasingly recognise the potential impact their financial choices can have beyond just financial returns. However, like any investment strategy, ethical investing comes with its own pros and cons, so let's have a chat about some of those today. One of the primary advantages of ethical investing is the ability to align your investments with your personal values and beliefs. This allows investors to support companies that are making positive contributions to society, such as those who are focused on renewable energy, social justice, or fair labour practices. Ethical investing can contribute to positive social and environmental change by directing capital towards businesses that are working to address global issues. This can help to drive innovation and sustainability in industries that may otherwise be slow to change. Companies that adhere to ethical and sustainable practices are often positioned for long-term success. By considering factors like environmental impact, corporate governance, ethical investors may identify companies that are better managed and less exposed to reputational and regulatory risks. Some of the consequences involved with ethical investing. The first one would be critics of ethical investing argue that by limiting investment choices based on ethical criteria, investors may miss out on opportunities for higher financial returns. So some industries like fossil fuels or tobacco may be excluded from an ethical portfolio, even though they are currently profitable. It's worthwhile noting that over the past 5 years, international share markets have returned around 11.5% per annum, and a leading international ethical investment over that same time has earned around 16.5%. So having said that, there's no guarantee that trend will continue. Defining what is ethical can be very subjective, and there's no universally accepted standard for ethical investing. Different investors and fund managers may have varying interpretations of ethical criteria. This can lead to potential inconsistencies in portfolio construction. So, for example, I might be comfortable, I might want to invest in mining companies whatsoever, but someone else might be happy to invest in a mining company because they're leaders in sustainability. So it does vary. Another thing to be aware of is that ethical investing may limit the pool of available investment options, and this can lead to less diversification in the portfolio. This could expose investors to higher risk if a particular sector or maybe an industry underperforms. Also, some companies or managers may engage in greenwashing. This happens when they present a misleading image of environmental responsibility to attract ethical investors, even if their actual practices might not actually be sustainable. ASIC is keeping a closer eye on this now. There's been some big cases recently, so hopefully that practice is going to cease. Last one, identifying companies that meet specific ethical criteria requires additional research, which can be time-consuming and challenging for individual investors. This complexity can lead to higher management costs associated with ethical investments. This can be managed potentially by using index investments. In conclusion, ethical investing offers a way for investors to align their financial decisions with their values and contribute to positive societal change. However, it's essential to carefully consider both the potential benefits and the drawbacks of this approach. Balancing ethical considerations with financial goals and understanding the potential trade-offs is really important when making informed investment decisions. This field is investing really quickly, so if you're interested in it, we'd advise you to stay informed, and if you need a hand, just give us a call. Until next time, stay well. We'll see you soon. Cheers.